Hello, everyone, and welcome back to another episode of the Let's Get Technical series. This is episode 49th. We've been doing the Let's Get Technical series for over a year now, and I'm Kavita Agrawal, the founder of EXP Invest. We are here today to talk about a very important topic, that is tax loss harvesting. What is tax loss harvesting? Basically, whatever portfolio loss you have now, even though it is a loss, there is a way you can take advantage of it in order to reduce your present and future tax liabilities. So we are going to get into the details of it so that you understand. We'll be covering some basic questionnaires, some basic topics related to this, and if you have questions related to it, don't forget to put it in the comments. However, before we jump into the presentation, since this is a Let's Get Technical series, I want to first touch upon the markets. Mainly because today has been a very negative day in the market, and I'm sure a lot of you might be feeling a lot of pain because if you've not experienced, if you've not exercised healthy risk management strategies, then today you're probably seeing deep reds in your portfolio. So let's get started and let's take a quick look at the chart of Nifty and assess what is going to happen. And on that same note, I'm also going to drop the link of the video that I've already recorded with my market commentary in the comments, because lately, since the last 2 days, I started posting the market commentary, which I was posting only as a text format in my Telegram channel. I've also started posting that as a video format on Instagram and YouTube, because I realized a lot of people were interested in also seeing what I was visualizing on the charts, right? So I'm going to drop the link in the YouTube and you can check it out. So if you want to check out my analysis of Nifty and why this correction is happening, what my opinion is forward looking, you're more than welcome to watch that YouTube video. And I will also do the live analysis for you very quickly right now. So here is the Nifty chart. And if we start from the 3-minute time frame, like we always do, what you will notice is I've been talking about this negative divergence and the negative range shift, which is very visible on Nifty. So this basically has started to play out. So if you are part of the Trade Together program, you're already aware that the last few weeks has been really difficult to swing trade profitably. The reason is that the market has been in this, what I like to call this extended triangle pattern or the extended fifth pattern, which means that we were initially experiencing this straight, smooth uptrend where it was very easy to make money. What was happening now is that there were a lot of ups and downs in the market. Time to time, sure, we were making an all-time high, but it wasn't really sustaining and it was getting followed by sharp correction. Now, the problem with such a choppy market is primarily that a lot of stop losses get triggered. Why? Because a lot of fake signals come up in the charts. This actually requires change in strategy. So the strategy which was being deployed during the major bull trend, that no longer works. Now we have to go one step further. We need to seek more confirmation. So I'll give you a quick example. I like to use the decision-making time frame concept. It's a concept that I have come up with. I have come up with it all by myself. So if my decision-making time frame is, say, the 75-minute, what I want to ensure is I want to make sure that two time frame lower than that is the 3-minute time frame, goes into the bullish range shift. And then once that is confirmed, when the 15-minute time frame comes back to the RSI support level, is when I'm going to make my entry. So this is a bit of a change. So far, what I was doing is based on the 75-minute time frame being the decision-making time frame, I was taking entry only on the basis of the 15-minute time frame. But on the basis of some past trade analysis from the month of January till date and versus the month of October till the month of January, I have seen that this little bit of tweak in my strategy can give me potentially better results. So moving forward, even though there are opportunities in the market, this is what I'm going to use to make sure that I'm participating in top-notch opportunities. If you see here, I've also marked this correction line. Let me make the opacity to 100% so you can see it. This is the course which I am expecting this correction to take. So today we have accomplished but also breached the level of 22,000. I believe 21,850 is a very important support zone. Now, if we are lucky, then we are going to see another rally from here all the way to 22,250. This is going to be a very good opportunity for you to exit portfolio stocks. However, the tax loss harvesting season, which is the last 2-3 weeks of the month of March, is going to be a hurdle for you. With that, let's segue into our discussion for the day, and I'm going to cover why that is going to be such a hurdle for you. Before that, I want to tell you about the stock request sheet. So what is the stock request sheet? After this session, I'm going to be answering your queries. So please don't forget to fill this form and share your query with me. This way we are able to operate a little bit more systematically, and that way you're also a little bit more conscious about the opportunity you're getting in terms of getting your stocks analyzed by me. So make sure that you input the name of your name and your correct number, because only when you input your correct number will you be able to get the response on WhatsApp. My team will reach out to you and give you my response in terms of the specific target, the watch loss, the risk reward ratio, and the commentary, so that you don't have to sit and take notes. And when you mention the name of the stock, be sure to mention the name of the ticker, your average cost price, and your comment. I would suggest you enter the name of the stocks where you feel that you're being very risk. Remember, risk avoidant and risk averse are two different concepts. We think we're being risk averse, but you're actually being risk avoidant if you're avoiding to book losses and freeing up the capital. So pick up the biggest loser in your portfolio, put the name and the average cost price, and I will analyze and give you actionable advice on that. With that, let's move on to our presentation of the day. So this is our presentation, and we are going to talk about tax loss harvesting specifically for cash segment trading. Why cash segment trading? Because you all know that I'm a swing trader, a hardcore swing trader. And so knowing the taxation for this specific field is very important for me. On that note, the tax rules for the derivative segment is very different. Remember, derivative intraday trading is considered as a business income. So there are different rules. There are different tax slabs, higher tax slabs. There is a tax slab in this as well. There's a turnover threshold, which we are going to discuss, but you need to make sure that you file your advance taxes if you're doing derivative trading and you're profitable, or intraday trading and you're profitable, because if you don't, you can be penalized by the government. Right? What is cash segment trading? Basically, where you take the delivery of the shares in dematerialized format, and then when you sell, you lose the delivery. Here, you're not using any kind of leverage whatsoever. Some kinds of tradings which comes under cash segment trading is swing trading. What we do, we buy the stocks, hold for maybe 2 weeks to 3 months, and then we sell it. Another kind of trading can be your BTST. You buy today, sell tomorrow. If you're not taking the delivery of it, that's a little bit of gray area. I'm not very sure about it. And another thing is, of course, your long-term investment. First, understand what are the taxation rates. If you are doing short-term trading as a swing trader in the cash segment, you are eligible to pay 15% on your profits. And under the long-term capital gains, you are eligible to pay 10%. There are some nitty-gritties, like the first 1 lakh rupees profit will not be taxed, but there is no such exemption in STCG. That is the short-term capital gain. So if you're buying stocks, holding for a few days and selling, whatever profit you make will be taxable on 15%. Another important thing that I want to mention that I have noticed a lot of people don't know is that the profits that you booked in the cash segment cannot be set off, or the losses that you've booked in the derivative segment in futures and options trading cannot be set off against your short-term capital gains. So if you've, say, incurred 3 lakh rupees loss in derivatives trading, that is options trading, and you've made a 7 lakh rupees profit in short-term trading, you'll not be paying tax on 4 lakh rupees, you'll be paying tax on 7 lakh rupees, and the 3 lakh rupees loss is going to get carried forward for you. Okay, so make sure that you understand this difference before you indulge in any kind of derivative trading. Not understanding this can be really disadvantageous for you, because you might end up filing your taxes wrong, or you might end up planning your taxes in a wrong manner, even if you're having it professionally filed by someone responsible who has a holistic knowledge of the field. But when you plan your trades, you need to know this. And this is also one of the reasons why I strongly discourage against derivative trading, because the taxation there is very complicated and it is super risky. Okay, moving on. What is tax loss harvesting in cash trading? Tax loss harvesting basically involves selling the shares where you have a loss in your portfolio to offset the capital gains, thereby reducing your tax liability. Now, if you're thinking that I don't have any profits, so I don't have any tax liability, so I am going to keep holding on to my losers and indefinitely until maybe it reaches break-even point or it begins to rally. What you have to understand is that this loss can be carried forward. So suppose you started today, you're not a profitable trader, you've incurred 1, 2, 3 lakh rupees of loss this year in trading. It's fine. Book that loss, file that tax, because if you don't file that loss, you will not be able to carry it forward, because this year maybe you're a bad trader, next year you might become a good trader, you might have profit. If you carried forward your loss, then next year you can set off this year's loss against your profit and you don't have to pay taxes on that profit. Versus this year, suppose you already have 5 lakh rupees profit. So how you can find out what's your taxable PNL? You just go to your brokerage account, and so in Zerodha, you go to your console, you go to your report, you go to your tax PNL, you enter the period, and then you see what your taxable amount is. So if you see that there is 5 lakh rupees profit there, but on the other hand, you're also seeing like 2.5 lakh rupees loss in your portfolio, just sell those stocks, book that loss. That way your tax liability gets reduced. Even if you have loss right now, even if you have say 2 lakh rupees loss, and right now your portfolio is showing further 5 lakhs unrealized losses, book that unrealized loss, file that you have made STCG short-term loss of 7 lakh rupees, carry that loss forward. That will give you an advantage in the future when you do become a good trader and start booking profit. And when I told you at the end of my Nifty analysis that the reason why the March month is usually weak is because of this, because smart players out there with big portfolios are selling the portfolio losers. So you will see that stocks which have not gone up a lot this year are especially the ones that are falling a lot in this correction. Why? Because the big hands that have been holding them are getting rid of them to take advantage of the tax loss harvesting. So what they are basically doing is they are setting off the profit, so they have to pay lesser taxes, and at the same time they are, if there is loss getting generated, they are using it, carrying it forward to set off the future gains. There is another advantage which does not often get spoken about when we talk about tax loss harvesting. This is also a very good way of bringing your portfolio or your capital under your control. See, I understand that there is a lot of loss avoidance, which means that you have loss in the portfolio, you don't have an exit strategy, but you don't want to sell it simply because you have your mind set at the fact that I don't book losses. Price will come up and I will sell. That kind of thinking will not help you be successful in the market. You have to be very shrewd, you have to be very strategic, because remember, there are a lot of people out there fighting to make money in this market. You have to be competitive, you have to be very smart, you have to have an edge. Make strategy your edge. If you don't know analysis, get in touch with a research analyst who can help you. Now, so tax loss harvesting, like I said, has so many advantages for you. I hope you understand the concept of tax loss harvesting now. If you have any specific question about this, feel free to add it in the comments. I keep looking at the comments. I'm going to answer your question instantly. But if you have questions related to stock query, be sure that you fill the form of stock query. Let me just check whether the link has gone into the comments or not, so that you all can fill the form properly. Please fill this form, stock analysis request. So losses in the cash segment can be set off against both short-term and long-term capital gains. So remember, this year the market has seen a very strong rally. If you've been smart and if you've booked out your long-term holdings and you've made big profits, you definitely want to make sure that you're harvesting whatever loss is there to reduce your tax liability on that. This is a big advantage. However, again, I'm going to emphasize, you cannot set off your cash segment profits with, or your derivative segment losses with your cash segment profits, and vice versa. They are both treated as different businesses or different form of operation. So they are both taxed differently. So make sure that you know the rules before you indulge in different kinds of tradings. And the unabsorbed losses can be also carried forward for 8 consecutive years. So the government is giving you 8 years to become a better trader and take advantage of the tax of the loss that you've harvested and avoid tax liability in the future. See, this is not even tax avoidance. This is just being smart with your taxes and your portfolio management. One more thing that I want to mention again with respect to derivative, that if you carry forward loss there, you can only carry forward that for 4 years. So remember, in cash segment, you can carry forward the loss for 8 years, but in derivative segment, you can only carry forward the loss for 4 years. There is also a concept of the threshold of turnover, and again, a very important concept which I have learned that a lot of people are not aware about, that when you're doing short-term trading, if your turnover is more than 1 crore rupees, you will be required to pay taxes at your tax slab rate. There are more nitty-gritties. I'm not a tax expert, but this is on a very high level. This is what the rule is, that if your turnover is more than 1 crore rupees, then you will no longer be paying 15% tax. You will be paying whatever is your tax slab rate. So if your tax slab rate is 30%, you will be paying 30% taxes. There is one caveat to that, however, since your short-term trading profit is being considered as a business income, you are also eligible to reduce costs. So for example, say you've hired the services of a research analyst. Without those services, you could not have booked the profits, right? So this becomes a cost that you can reduce. You've used internet, you've used phone, you've used your laptop, you can amortize these. However, you need to maintain proper records because you will be eligible for an audit. So make sure you keep your books properly. And if you are doing swing trading to the extent that your turnover is more than 1 crore, you need to make sure that you're doing it in a professional, proficient manner, and you're not just doing it in a poor way. There is another complication with respect to Section 44AD. Again, I'm not a tax expert. I'm not going to expand on that. But if you have questions, if you're opting for the presumptive taxation scheme, then you should definitely sit with your chartered accountant and get an understanding of this. Now, record keeping and compliance is another very important aspect of your portfolio. Maintaining accurate records for all transactions, including purchases and sales date, quantities, prices, and charges, is crucial for compliance and effective tax loss harvesting. Now, remember, when you join the Trade Together program, I always encourage you to make sure that you're maintaining your trade tracker. This is a very important discipline, and you need to stay on top of this. Now, key takeaways for effective tax loss harvesting: regularly review your portfolio to identify the opportunity for tax loss harvesting. This happens every year in the month of March. So you will see historically the month of March barely ever gives positive returns. It's mostly very negative because, like I said, the smart people who are operating in a methodical manner and who are not just playing with the market they know of this advantage and they are making the most of this advantage. So come March, they sell the losers in the portfolio, which actually exert a temporary negative pressure on the market, driving the prices really lower. Now, you also need to consult with a tax professional to optimize your tax loss harvesting strategy and ensure compliance with the latest tax regulation. Remember, you cannot be over smart about it, in the sense that don't just sell the stock and buy it the next day, because in that case, if you go under audit and it gets caught, your tax loss harvest will be rejected, and you might also be subjected to penalty. Now, in India, we don't have set rules for this, but in the US, there is a rule called wash sale, where if the tax department, that is the IRS, if they identify potential manipulation and improper application of this spirit of taxation, then you will be penalized for it, and your loss will not be set off against your profits. You'll have to pay full taxation. In India, we don't have such strict rules, but be sure to be very mindful of how you apply this strategy. Don't try to outsmart the government. It's not as easy as you think. Before I actually end this session, I also want to talk to you, or rather just tell you about this Telegram channel that I run. So this is my Trade with Kavita Telegram channel. I am going to drop the link to this channel in the comment section for you to join. So the primary advantage of joining this Telegram channel for you is that number one, I share daily market quizzes, which can help you elevate your own stock market related knowledge. I keep turning the topic between technical analysis and swing trading and general knowledge about stocks and trading. I also post my market commentary. I have been talking about an impeding market correction since a long time, and the members of my Trade with Kavita channel have benefited from my insights on the market during market hours. I also post the links of my weekly webinars 10 minutes before the session, so that you don't end up forgetting. And whenever I'm coming live to share new bits of knowledge and some value for you, you can do that. Now, a lot of you reach out to me on the comments and say that you want to get connected with me. On my Telegram channel, the link to book a call with me and my team is presented. So you're more than welcome to click it and book a session for yourself. In addition to this, if you scroll through, you will see many other resources. For example, I also share books related to technical analysis. If you're enthusiastic about learning, you're more than welcome to download these free PDFs from my Telegram channel. With that, let's now move on to the stock queries and see what you have in store for me. Let's gravitate towards the queries which have not been answered yet. So I'm going to try to answer maybe 5-6 queries today. So we have Aman Kumar with us, and Aman is asking for IDFC First Bank at the rate of rupees 80.58. IDFC First Bank. So I am personally very bullish on IDFC First Bank. I think it's a very good stock, and so your holding has just recently gone into loss. But to be honest, if you're comfortable holding the stock for the long term, I would suggest that you do that, because it's a really good stock, it's a really good company, and when the recovery comes, I do expect it to rally significantly. It has already been in correction for almost 200 days now, and it has fallen 20% since the previous peak. It has basically not participated to a great extent in this market rally, but remember, every stock, every sector does not participate in every rally. That is why we have sectoral churn. This stock gave a very good rally of 3% in 175 days between the period of 22 June to 22 December. And again, it gave almost 100% rally again in the same 6-month period right after March. So if you see here, last time the rally did begin in the month of April, and I am very hopeful that again, the stock will repeat history. It will bounce off from the 250 EMA support on the daily time frame and move on to make a new high. So do keep holding on to IDFC First Bank. If I have to give you a stop loss here, I would suggest the level of rupees 75 for you as the stop loss, and for the target I will mention the level of 137. Like I said, I am very bullish. That's a 73% target at the level of rupees 130. So stop loss is 75 rupees and target is 137. The spot price is 77.5. Moving on to the next query, we have Puneet asking for Biocon analysis at the rate of rupees 350. He's holding 40 shares, and should he hold to recover the loss, or is there any target price? So I'm not bullish on primarily because it has breached below my key support level. So if you're holding since 350, you've already messed this up really badly. You did get an opportunity to exit here, which was incidentally also my target level for the stock, around 300 rupees. I had bought the stock around 250, sold it at 300 for my portfolio management clientele. And since then, the stock has been in correction. Based on this negative divergence that I see on the daily time frame, I do expect the negativity to continue. So I am quite bearish on the stock. If you look at the larger time frame, so this is a super trending stock in the sense that once it gets into a trend, it just keeps going on and on. However, right now what I'm seeing is that this massive correction is just the beginning. If you see, the 250 EMA of the weekly time frame has been extending major resistance, and I expect that the price is going to decline at least to the level of 239 here. And so this was an important support at 240. If it doesn't stop falling, it can also correct and go below 200 rupees. So honestly, I would recommend you to book the loss here and exit the stock immediately so that you can use tax loss harvesting right now, it being the month of March. There is no target and no stop loss for you. Unfortunately, the only comment I will give for you is you should exit the stock right away. So we have Akbar Ali, who's asking for NHPC, another stock that I am not very bullish on at all. NHPC has already given a massive rally, but at the same time, it is a super trender and it has given negative divergences on the daily time frame. So what does that mean? If you see the historical charts, so this is the weekly time frame. So if you see the historical charts, the stock has a tendency of giving super extended rallies. Now, since this stock has topped out here right at the top, it has created a massive negative divergence here. Negative divergence on the daily time frame plus the 75-minute time frame has gone into the negative range shift, which tells us that the stock can become either negative or can stick in consolidation for an extended period of time. So for now, I don't think this is a very optimal stock in terms of keeping your cash invested. So you might want to take an exit and look for better opportunities like IDFC First Bank. So for NHPC, I would recommend you to maintain a stop loss right at this 100 EMA of the daily time frame. So your stop loss would be around 73 rupees, and your target, I will give you 97.7. So if 97.7 is achieved, exit the stock for the time being. When the stock becomes positive on the 75-minute time frame, then maybe you can consider re-entering the stock again. Let's take a look at NH for Abhijit. So he wants to accumulate NH up to 10% of my portfolio for lifelong. If the business and management remains focused like now with 25% CAGR expectation, please share your view, both the company and accumulation strategy. Abhijit, I really like the way you've asked your question. It's very strategic and it's very well formed. I would love it if you could connect with me and let's work together, because I really prefer to work with people who have some understanding of the market and have a mature viewpoint. And if you're an audience member and if you do belong to that category, please do join my Telegram channel and let's have a chat. So what I can see is that yes, NH does look super strong from a long-term perspective. Usually I never recommend buying a stock after the rally, but the way the rally is unfolding, the way the momentum is holding up, there is no negative divergences, the volume is showing up at all the right times. I think, Abhijit, that your opinion about the stock is pretty accurate. And here, even though the stock did go into the negative range briefly on the 75-minute time frame, it has already recovered and made a positive divergence already. Also, the volume activity has shown strong buying right when there was a small bounce. All of this is very encouraging, and I think NH is a very good candidate for a potential buy on dip. Here, the stock is already hovering close to the buying range. So if you want to buy the stock, I would suggest you maintain your stop loss somewhere near the level of 1100 and you keep holding the stock for the long term. In fact, the stock is very interesting. So I'm going to draw a vertical line and set an alert so that next day when the market opens, I get an alert in the first hour to assess the stock for a potential entry myself. Moving on, let's take a look at Akbar Ali's JP Power request. He's, oh my God, he's holding since 18.5. So not very recently, but please, you should refrain from buying controversial stocks. JP Power is a very controversial stock, even though it has given this seemingly massive rally. You've bought the stock at a really bad time. It's a very illiquid stock. It is not suitable for short-term trading at all. I think this correction that has started now, it has potential to continue for longer. I would strongly recommend you book your losses and harvest them for reducing your tax liability today or maybe in the next 8 years whenever you turn profitable, and refrain from purchasing such stocks which have illiquidity, especially for the short term. So Lokesh is asking for the analysis of IR. So IRFC was unfortunately also part of my Trade Together program stock recommendations, and I had to exit it because the market was looking very negative and a loss has been booked there. Now, because of the very volatile nature of the stock, that was a pretty big loss. The allocation was managed, so hopefully we'll be able to recover that when the market becomes better. Right now, I don't think IRFC is a good candidate for holding, because what I can see is that this stock has moved to the negative range and is expected to continue to be in the negative range. The 75-minute time frame is also gone into correction. So you see, If you're okay holding the stock for the long term, then sure, go ahead and keep holding it. But if you're a short-term trader and if you entered the stock from a short-term perspective, I would suggest you get out of the stock. My entry strategy on the stock is very simple, re-entry strategy. I am going to wait for the 75-minute time frame to become bullish again. That is, the next time I get an alert that the RSI on the 75-minute time frame has breached the level of 65, then I'm going to wait for the 15-minute time frame to give me a pullback, and then I'm going to enter the stock, right? Now, let's take a look at another query by Rishi. He wants to know about Escort. He bought it at 3,200 and he has 275 shares. He's asking whether he has any reason to keep holding. Guys, please make sure that you're mentioning the name of the stocks in the format which has been suggested. Don't input unnecessary spaces. Now, 3,200, massive loss, very good opportunity for harvesting this and reducing your tax liability. Again, Escort is a very good stock for long-term swing trading. What do I mean by long-term swing trading? If you can manage to buy it at the bottom, basically whenever the daily time frame comes close to the level of 30 and hold it, then this stock has huge potential to give you wonderful returns. Escorts is one of the stocks where I swing trade actively whenever it is in the uptrend. And thank you very much for bringing this stock up, because from what I can see on the charts, the 250 EMA has been touched and the daily time frame is already giving a beautiful positive divergence. At the same time, if I look at the 75-minute time frame, there is a negative, I wouldn't call this a negative range shift, because the RSI is not really breaching the level of 30. However, it is not as bullish as it was clearly, and obviously also when it was in the uptrend, right? Why do I say that? Because earlier the range for the stock was around 40 to 80 plus. Now the range has become 30 to 60 plus. It is still positive. It shows that the underlying long-term trend in the stock is still quite positive. So I think this was a very good stock to continue to hold from the long-term perspective. But it looks to me like you bought it at the end of the previous uptrend, which is a very bad practice. Please don't buy stocks after they have rallied. Now, if you want to hold on to the stock for the long term, I would suggest that you add more and you average the cost. Now is a very good opportunity. In fact, I will also assess this stock to include as a recommendation in my Trade Together program. So with that, we've come almost to the end of this session. Before taking off, I would like to take a quick look at all your comments and see if I can help you out. Did today's Nifty fall take you by surprise? Sherman is asking. No, Sherman, this was not a surprise. It was very much expected. And why I've been expecting this correction has been mentioned on my Telegram channel over and over again. And if you also look at my Market Outlook series on every Friday, you will get a more comprehensive analysis of why I think this correction was expected. There is nothing surprising about it. So Bose is saying that I think it will rally if it takes support. Do better in the coming days. So Ajit, please fill up the stock request form and your question will be answered when I get to it. In the choppy market, it's a good time to average some stocks or wait till March end. It really depends on the specific stocks. The kind of deep fall that we're seeing is testimonial to also the quality of the stocks. Good stocks are holding themselves pretty well. For example, ITC and Abbott India. Persistent is another very good example. These stocks, JSW is another example, JSW Steel. These are good stocks, so they are holding themselves up pretty well. But stocks which are not so good, even though they've not participated in the previous rally as much, they are declining a lot and very sharply because the smart money is getting out of it and booking losses. Shravan, I will repeat, kindly fill up the form. I will drop the link expinvest.in/stock request again in the comments for you to be able to fill the form. So it looks like because I have not included HTTPS, you might not be able to click it. So please copy the link from my comment and paste it in your browser. With that, let's quickly move to ET and look at the comments there. I hope all of you have joined my Telegram channel. Don't miss out on that. We can see a lot of stock queries from Rick, from Surbi, from Nagesh, from Bhargav. Kindly, I request you to please fill up the form that I have already shared. Let's do things a little bit more systematically. So guest is saying that I've made losses in the entire year. It's okay if you've made losses. You might be new to the market. Identify that there's probably a skill or a knowledge gap. Work on filling that up. For now, harvest this loss so that you can set off the future profits against it, because remember, you can carry forward the losses for 8 years. Nagesh, yes, you can get in touch with me. I have already said join my Telegram channel and there you'll get the link to book a call. Please use that link and we can have a call definitely. Adani Green, should I buy now? Shrikant, you know the drill. Please fill up the form. Same goes for the guest user. Nilendra Patnaik ji, you're saying something about data pattern. What do you want to know about data pattern? You have to be a little bit more specific. Your question is to wait for me to entertain it. So Rajneesh ji, the link to my Telegram channel has already been pasted. I'm going to paste it again in the comments just for you. Rajneesh ji, I hope you are able to see my Telegram channel link, and I hope you'll be able to join the same immediately. With that, we come to the end of today's amazing session. I hope I was able to teach you something new. I will be coming live again on Friday at 5 p.m. with the Market Outlook series. See you at my Telegram channel. Thank you for joining me, giving me your time and attention.